The man who once called himself Money is now facing a very different kind of fight, one that doesn't take place under bright lights or inside a boxing ring. It is a fight against numbers, legal claims, and the relentless machinery of the United States tax system. And this time, there are no judges, no rounds, and no guaranteed victory. In March 2026, the Internal Revenue Service filed a $7.3 million tax lien against Floyd Mayweather Jr. in Las Vegas. The claim is tied to unpaid taxes from 2018 and 2023. As of March 26th, the balance remained outstanding. For a man who built a global image around wealth, luxury, and financial dominance, the headline sent shockwaves through both the sports world and financial circles. To understand the seriousness of the situation, it is important to understand what a tax lien actually means. A tax lien is not simply a bill or a reminder. It is a legal claim by the government against a person's property. It gives the government rights over assets such as homes, cars, and financial accounts until the debt is paid. In simple terms, it means the government has a stake in everything you own until you settle what you owe. For Mayweather, this is not unfamiliar territory. His history with tax authorities stretches back years. Despite earning more than $1 billion during his career, he has repeatedly faced large tax obligations that were not paid on time. In 2015, the same year he earned an estimated $250 million from his historic fight with Manny Pacquiao, he owed the IRS $22.2 million. At the time, his team argued that his wealth was tied up in assets and not immediately available as cash. He later cleared that debt using earnings from his 2017 fight with Conor McGregor, which reportedly brought in around $300 million. But the pattern did not end there. In 2023, a U.S. tax court ordered him to pay approximately $6.6 million in taxes and penalties related to 2017. Now, with the latest $7.3 million lien, his tax issues over the past decade have crossed $36 million. For someone whose public image is built on unlimited cash flow, the repeated delays raise difficult questions. Those questions became even louder earlier in 2026, when a detailed investigation began to reveal a more complex picture of Mayweather's finances. Reports suggested that behind the image of extreme wealth, there may be significant financial pressure. According to those findings, Mayweather had taken out approximately $54 million in loans within a short period, using multiple properties and assets as collateral. These reportedly included residential homes, business properties, and even personal luxury items. Financial experts noted that this kind of borrowing structure carries risk. If payments are missed, several assets can be threatened at the same time. At the same time, there were reports of major asset sales. His private jet, once a symbol of his lifestyle, was sold in late 2025. Properties in high-profile locations such as Miami and Beverly Hills were also reportedly sold. These moves taken together suggested a shift from accumulation to liquidation. Legal disputes added another layer of complexity. Multiple lawsuits have been filed against him in recent years, including claims from jewelers over unpaid purchases and disputes involving property agreements. There have also been claims related to unpaid rent and business deals that did not go as planned. One particularly notable claim came from Logan Paul, who alleged that he was owed money from their 2021 exhibition fight. According to Paul, a side agreement guaranteed him a share of a deal that he says has not been paid.
Has he paid you, or is that something that you can't disclose right now?
He has not paid me in full. That is a fact. Short a few million.
While these claims remain disputed, they contribute to a broader narrative of financial tension. Mayweather has strongly denied suggestions that he is in financial trouble. His legal team has argued that borrowing against assets is a normal strategy used by wealthy individuals. They insist that these actions do not indicate financial distress, but rather standard financial management. At the same time, Mayweather has taken legal action of his own. In early 2026, he filed a massive $340 million lawsuit against Showtime networks and individuals associated with his past management. In that lawsuit, he claims that large portions of his fight earnings were redirected into accounts he did not control. He alleges that hundreds of millions of dollars may have been mishandled or hidden. If those claims are accurate, they could significantly change how his financial situation is understood. Instead of a story about overspending, it could become a story about missing income. However, these allegations are strongly denied by the parties involved. and the case is still ongoing. While these legal battles unfold, the IRS remains focused on one thing: the unpaid tax bill. The government does not wait for private disputes to be resolved. From its perspective, the obligation is clear and immediate. Faced with mounting pressure, Mayweather has turned to the one arena where he has always had control: the fight business. Despite officially retiring in 2017 with a perfect 50-0 record, he has continued to participate in exhibition bouts. These events are less physically demanding but still generate significant revenue. In 2026, his schedule appears unusually busy. Multiple exhibition fights have been announced or discussed, along with the possibility of a high-profile rematch with Manny Pacquiao. These events are expected to bring in large paydays, potentially enough to cover existing debts. This strategy is not new. In the past, Mayweather has used major fight earnings to settle large financial obligations. After the Pacquiao fight in 2015 and the McGregor fight in 2017, he used those massive paydays to resolve tax issues. It has become a familiar cycle: generate a large income through a major event, then use it to clear outstanding debts. However, there are signs that this time may be different. Some of the planned fights are surrounded by uncertainty, including disputes over contracts and questions about whether certain events will take place as scheduled. There are also reports that advances have already been taken against future earnings, meaning some of the expected money may already be committed. At the same time, the broader financial picture appears more complicated than in previous years. There are more legal disputes, more reported debts, and more scrutiny than ever before. The margin for error appears smaller. Despite all of this, Mayweather continues to project confidence. On social media, he still presents the image that made him famous: luxury, wealth, and control. Photos of private jets, cash, and high-end lifestyle continue to appear regularly. But behind that image, the reality may be more complex. Financial experts often point out that wealth is not just about total assets, but also about liquidity. A person can own valuable properties and still face cash flow challenges if those assets cannot be quickly converted into money. This distinction may be central to understanding the current situation. If much of Mayweather's wealth is tied up in long-term assets, it could explain why large tax payments have been delayed despite his overall financial success. As of now, the IRS lien remains in place. It does not mean his properties have been taken, but it does mean the government has a legal claim over them. If the debt is not paid, further action could follow. Looking ahead, the most likely outcome is that the debt will eventually be settled. Mayweather has a long history of finding ways to generate large sums of money when needed. The planned fights, if they go ahead, could provide more than enough income to resolve the current lien. But the bigger question goes beyond this single payment. It is about the overall structure of his finances and whether the current pattern can continue. The combination of loans, asset sales, legal disputes, and tax issues suggests a level of complexity that is difficult to ignore. For years, Floyd Mayweather Jr. was known as one of the smartest earners in sports history. He controlled his career, negotiated his own deals, and built a brand centered on financial success. That reputation is now being tested in a very different environment. In the ring, he was undefeated. But outside of it, the challenges are more complicated and less predictable. There is no clear opponent, no fixed timeline, and no guaranteed outcome. The $7.3 million tax lien is not just a number, it is a signal, a moment that brings multiple issues into focus at once. It connects past decisions with present realities and raises important questions about the future. As the situation continues to develop, one thing remains clear: the story is far from over. The fights both inside and outside the ring are still ahead, and for the first time in a long time, the result is uncertain.